This is the 2026 Roadmap to Financial Freedom. Not a fantasy, not a shortcut, not a gamble, a roadmap. Because wealth is not built by luck. It is built on foundations. And like any structure, if the foundation is weak, everything collapses. In 2026, the world is noisy. Markets are volatile. Costs of living are higher. Technology is changing jobs. Debt is easier than discipline. So the question is not, how do I get rich fast? The real question is, what system can I build that works in any economy? Today, you will learn the 5 foundations of wealth. Each one is simple. Each one is proven. And together, they form a complete financial roadmap. Let's begin. Foundation 1. Pay yourself first. This is the first rule of wealth. And the most ignored? Pay yourself first. Before rent, food, entertainment, shopping. You pay yourself. This idea appears in The Richest Man in Babylon, Atomic Habits. Every serious wealth philosophy, the principle is simple. Save before you spend. Why this works. Most people save what is left over, which is usually nothing. Wealthy people reverse the order. Income comes in, savings are removed, life adjusts to what remains. This creates automatic discipline, predictable growth, emotional control. It turns saving into a habit, not a decision. Action step. Start with 10% of all income. Not someday, not when it's easier. Now, automate it. Treat it like a bill. Never touch it. This is not about being rich. It is about building control. Control comes before wealth. Foundation 2. Assets versus liabilities. This principle comes from Rich Dad, Poor Dad. It is simple. Assets put money in your pocket. Liabilities take money out. Most people get this backwards. They buy expensive cars, bigger houses, status items, and call them assets, but if it costs you money every month, it is a liability. Examples: assets, index funds, rental property with positive cash flow, businesses, royalties liabilities, consumer debt, luxury vehicles, lifestyle upgrades, high-interest loans. Wealth is built by growing the asset column, not by looking rich, but by becoming rich. Action step. Ask one question before every purchase. Will this put money in my pocket or take money out? Then choose intentionally. Wealth is not about restriction. It is about direction. Foundation 3. Compound interest and index funds. This foundation comes from The Intelligent Investor. Long-term market history. Mathematics compound interest is not exciting, but it is powerful. It means your money earns money. Then that money earns more money. Time is the engine. Why index funds matter. Most investors fail to beat the market, professional managers included. Index funds own many companies, have low fees, reduce risk, follow economic growth. They are not speculative. They are systematic. They turn global productivity into personal wealth. Simple strategy. Invest monthly, use diversified index funds, reinvest dividends. Hold for decades, not years. Decades. This removes emotional decisions, market timing. Panic selling. It replaces them with discipline, patience, probability. Action step. Open an investment account. Start with a small amount. Increase it every year. The habit matters more than the number. Foundation 4. Mindset and the psychology of money. Money is emotional. Markets are psychological. Wealth is behavioral. This foundation connects to the psychology of money, Stoic philosophy, risk management. The greatest risk is not the market. It is your reaction to it. Stoic principle, focus on what you can control. Savings rate, spending habits. Risk exposure learning, do not try to control. Markets interest rates, politics news. Wealth grows when emotions are stable. Risk management is wealth management. Risk is not bad. Uncontrolled risk is bad. Wealthy investors diversify, avoid debt traps, plan for bad years, expect volatility. They survive downturns, and survival creates opportunity. Action step: build an emergency fund. A long-term mindset. A calm response to loss. Fear is expensive. Patience is profitable. Foundation. 5. The 10x rule. Massive action in 2026. All the knowledge in the world means nothing without action. This foundation comes from the 10x rule. In 2026, competition is global, automation is rising, average effort is losing. You cannot think small and expect big results. What massive action means? It means learning faster, saving harder, investing consistently, increasing income aggressively, not one area. All areas. Wealth's built on speed plus consistency plus intensity. Income is the accelerator. Saving is powerful, investing is powerful, but income multiplies both. You must improve skills, increase value, seek leverage, build side income, not to impress, to accelerate. Action step: ask. What can I do this month to increase my income by 10%? Then act. Action creates clarity. Clarity creates momentum. How the foundations work together. These are not separate ideas. They form a system. Foundation 1 builds discipline. Foundation 2 gives direction. Foundation 3 creates growth. Foundation 4 protects you from yourself. Foundation 5 multiplies everything. This is not theory. It is structure. Common mistakes to avoid: waiting for perfect conditions, chasing fast money, ignoring risk, copying without understanding. Quitting too early. Wealth is boring at first, then it becomes powerful. Final summary: the roadmap. Here is the roadmap. Pay yourself first. Buy assets, not liabilities. Use compound interest. Control your psychology. Take massive action. Not once, every month, every year. This is how ordinary people become financially free. Not by luck, by design. Final conclusion: 2026 is not an easy year, but it is a clear year. The rules are visible. Discipline beats drama systems, beat willpower. Time beats timing. If you follow these 5 foundations, you do not need to predict the future. You will be prepared for it. If this roadmap helped you, like this video, subscribe for more financial education and strategy, comment roadmap if you're starting today. Because financial freedom is not a dream, it is a process. And today is step 1.